Let's get more on what's happening in the market today. We're joined by Colin Cieszynski, Portfolio Manager and Chief Market Strategist at SIA Wealth Management. Colin, great to see you. Thanks for joining us.
Oh, thanks for having me. It's good to join you today.
We've heard at least one observer saying today that any trade deal between the U.S. and China will take years to work out, but there is a knee-jerk reaction upwards today anyway.
Oh, well, and that's true. And it's really interesting when we look at the market action today, especially when we look at the futures, which obviously trade 24 hours. And what we saw was that overnight we had markets get literally marked up very rapidly on the open, and then since then they've just kind of been going sideways through the morning and even into the afternoon here. They're holding on to their gains, which is positive, but at the same time we're not getting any additional follow through either. And I think the reason for that is that this was somewhat known or telegraphed or anticipated. The U.S. was talking about this weekend meeting for several days before the weekend. It's been almost a week now. I think it started about Tuesday of last week. People started to anticipate this, and then as you mentioned, the other big piece is that, well, that's great. They've cut their short-term tariffs so that everything doesn't go completely off the rails. But to actually reach a trade deal could take a long time and be a lot bumpier. So it's like a case where, well, this is good news, but it's not necessarily the final news.
There's the S&P. Yeah, I mean, it hasn't been gathering pace at all as the session wears on there. And there is the NASDAQ. So a big jump. Interesting now, the NASDAQ, which was pretty flat over the past week, now up around 4%. Maybe we can put up the U.S. 10-year bond yield. We did see the U.S. bond yield moving up, which suggests people were selling U.S. bonds. And where are we now? Yep, we're at 4.5%. So that can, of course, be a measure of people worried about inflation when you see bond yields go up.
Absolutely. And I'm finding this quite intriguing, the action we're getting. And I think on one hand, we're getting the defensives are what's underperforming today. So we're seeing bonds get hit, golds get hit, the yen get hit, all the traditional, what we would call the safe havens are all getting hit, and so then that's kind of to be expected. So we're seeing this as a bit more of a risk-on market today. But the other intriguing one is that Bitcoin is actually down a little bit today. Now it's another market that had rallied last week quite substantially on anticipation that something would come out of this weekend meeting between the U.S. and China. But like equity markets, it's kind of had this move, and now it's kind of leveling off and even down a little bit. Even crude oil today, we saw it pop quite substantially over the evening and into the morning. But those gains have been quietly getting whittled down as the day has progressed.
Yeah, up around 2% right now. Let's have a look at copper, maybe intraday, because we have seen tech resources and Hudbay jumping, but copper, you say, not doing much in early trading anyway?
Yeah, copper is doing a little bit better, but not as well as you would think.
And actually, it's down now.
Like this.
Sorry,
when we woke up this morning and we saw crude oil up 3-4%. It's now 2%. You think copper would be up something substantially, and it hasn't gone up as much. But that's okay. I mean, there's nothing wrong with that. But it's more indicative that, yes, this is good news. But again, it's not necessarily there's still a long way to go between here and the U.S. and China actually resolving their trade issues with each other.
Some of the big earnings you're looking out for this week, Colin, include Walmart and Alibaba, both on Thursday, I believe.
Absolutely. They're both on Thursday. And that would give us an indication of what's happening with China, because the actual action in the Chinese market has been quite interesting. It was extremely strong for the first couple of months this year. It got really hit extremely hard when the U.S. implemented tariffs, but quietly over the last couple of weeks, it's been coming back again. And so it'll be interesting to see, well, what happens with tariffs, what happens with shipments, what happens with companies that are buying from Chinese manufacturers now, because there had been talk of slower shipments into the United States due to the tariffs. So how does that impact everybody, and how is all of this impacting consumer spending and the broader economy? You've seen here and there anecdotal reports of consumer spending slowing down, and certainly we had that negative GDP print for the first quarter. So it'll be quite interesting to see now what do they have to say about A, what's happened on the weekend, and B, what is actually happening in the economy.
And of course, we've heard forecasts. I don't think it's really shown up yet that we could be looking at empty shelves in stores because of disruption already caused by the tariff wars. I guess that would weigh on consumer spending if people can't find stuff to buy.
It certainly could. And then the flip side of that is also it could spike inflation if there's shortages somewhere.
Yes, because we know that there have been reports of shipping rates falling off, especially on the Pacific. Companies, I guess, hardly surprisingly, wondering, well, should I be ordering stuff from China with these big tariffs?
Absolutely. And that's something that now there's been a lot of concerns about this. And now, well, these tariffs have come off, but they're off for 90 days. And then what? And it's really hard for businesses to plan around something like that. By the time you order something, get it made, get it shipped, is several weeks of lead time. So you had this reprieve, and the market can act quite quickly to it, but businesses, it may take longer to react just because we don't know, well, are the tariffs coming back? What happens if the negotiations don't work out? There's still a lot of what ifs and uncertainty out there, even though today's news itself is good news, or at least promising.
Leave us with a final thought. We're a week away, or roughly a week away, maybe a bit more, from bank reporting season. Banks obviously so important to Canadian investors. How are you playing the Canadian banks right now, Colin?
Financials have been doing quite well. They've actually been on a relative strength basis, and the battles between stock prices that we monitor, banks have been improving lately, and that's encouraging because we had seen that back in the winter time, banks themselves and anything related to equity markets was getting hit pretty hard back in March and April, but they have been coming back. Mm-hmm. And if we do see signs of resilience in the economy, that's encouraging for the banking sector.
Yeah, it's actually TD apparently kicks off banking earnings season, and that's set for 10 days' time, May 22nd. And I see TD shares hitting their highest in at least a year today. Thank you very much for joining us, Colin.
Thanks for having me.
Colin Cieszynski, Portfolio Manager and Chief Market Strategist at SIA Wealth Management.